It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Oh, Sydney, I think, is well regarded as, world-class city now. And in terms of property prices, we're right up there. And in fact, Sydney is priced, into property prices in terms of buying into the market. It really has decoupled from the rest of the country.
And that is Veronica Morgan on our Wednesday morning. And welcome back to the Real Estate Breakfast right around Australia, 7 days a week, talking about your property news and information, including Brisbane, Sydney, Adelaide, Canberra, Gold Coast, Melbourne. We are literally everywhere. You can stream us on your favourite platform. And we are up to a Wednesday. It is July the 16th. Here's an interesting one. As we get older, our housing requirements, without a doubt, they do change. If you're young, you're looking for that CBD apartment, al fresco spaces. If you're in the family dynamic, you want a piece of land, right, for the kids, a backyard. Later in life, however, we look at features like wider doorways, minimal steps. If you've got an upstairs, downstairs, and you can't get up and down, you might look to put some sort of elevator in. More Australians, and this is what I find really interesting, are choosing to age in place, with some retirees renovating their home to give them exactly what they want. And let's bring in Veronica Morgan to expand on that a little bit from Good Deeds. And welcome back, Veronica, onto the Real Estate Breakfast. It's an interesting one. You've hit retirement age and then suddenly you decide, hang on, I can't quite find what I want in the marketplace. Things are expensive. Let's renovate.
Yeah. Hello, Craig. Good morning. Nice to be chatting about this with you. And it is an interesting one because you're absolutely right that, governments talk about doing all sorts of things such as, changing stamp duty, for example, or lots of commentators do anyway, in order to get older people to sell up their family home and downsize. And yet, even if you did that, I would argue that that's not the main reason that people aren't downsizing. There are a lot of other reasons behind it. And one is that, as you've alluded to, is that they find it difficult to find something to downsize to in the area that all their well-established links and all their contacts, their friends, their doctor, their hairdresser, all that sort of stuff in the suburb that they're currently in. So what do people do under those circumstances? And there's a whole market out there in, stair lifts and, and internal elevators as a result.
Yeah, no, it's really, really interesting. And the last thing that somebody wants to do as they're heading into retirement or they are retired is to do a renovation. I mean, let's be quite clear on that. That is the very last thing on their agenda. But as you say, if the stock ain't there, they got to live somewhere, right?
Well, that's it. And also, I think a lot of people do resist that idea of going into retirement living. And so, that's a totally different type of property ownership than your own home. A lot of people will recognise that they're going to lose quite a lot of the equity that they've built up over the years if their own home is their main asset. They might have adult kids that are discouraging them from that as well because they're thinking their own inheritances. But moving into a retirement village has a whole bunch of connotations around it. It's God's waiting room, and and there's a lot of resistance for making that step. So therefore, if they're not yet at that point, but they are starting to lack mobility, and the family home that they've been in for decades is not really fit for purpose, that's when they're going to start thinking, well, if I don't want to move into a retirement village, I'm not ready, but I need to do something. That is when they do turn to do the one thing that you wouldn't expect them to, and that is renovating.
Yeah, it's kind of like the rebel within. So if you know of somebody, or indeed if you are doing this yourself, you're at the retirement age, do get in touch with us. Our email address is myrealestatepodcast@gmail.com. We would love to hear from you. And let's segue into something that caught my eye, and that is just how obsessed are people when it comes to buying these exclusive properties in Sydney, these mansion areas, regardless of the price. The one that's been reported on is this 3.9 metre wide Sydney mansion in Darling Point, just sold for $19.9 million. If you look at the per square metre rate, gee, it's up there, 94 grand.
Look, it's funny because $1 per square metre is always higher with smaller properties than with larger properties. And it's the same with land size. You know, in a suburb where you'll have, you know, small blocks and large blocks, you know, I've plotted this out many, many times. So that's not unusual that you would have a very small property. And of course, in Darling Point is, you know, one of Sydney's or one of the country's most exclusive locations. Whether you call it a mansion, I'm not sure. It's more likely wedged between two mansions. It's very skinny. They've made the most out of it, I have to say. If you could flip it to say, well, you know, you could say, well, that's prestige end of the market, that's crazy. But you could also flip it to say is by far the cheapest house in Darling Point, the cheapest waterfront on Sydney Harbour. I would hazard in that part of Sydney Harbour that is in the eastern suburbs. It's a bargain if you look at it from that perspective.
207 square metres, they are saying. It highlights, as you say, Sydney's intense property values. The apartments have achieved higher per square metre figures like Bondi Penthouse at $126,000 and Australia's most expensive home, One Sydney Harbour's penthouse exceeding $100,000. So, yeah, it's a lot of money, but you're probably right if you hold on to that for a few years. Given the location, it is going to keep appreciating whether it's 207 square metres or not.
Well, I mean, it's the entry level to that suburb, you know, and every suburb has its entry level properties. But funnily enough, entry level don't often perform as well as the rest of the market. Like, for example, I looked at the last time that property sold, which is in 2021, so a little bit less than 4 years ago, so almost 3.5 years ago. And over that time, it made a gain of 26%, right? So it's a capital gain. Now, I don't know whether they renovated in that time or whether there was additional costs, but the actual Sydney median house price, according to CoreLogic, over that time, I did a quick ChatGPT check, so we know it might be slightly wrong, but the Sydney median house price went up by 36% in that time. So there's a 10% discrepancy there. This mansion, if you want to call it that, underperformed compared to the Sydney median. So whilst it looks on paper, you think, wow, that's $4 million over nearly 4 years, looks like a lot of money. But as a percentage of what they paid for it, the original owners or the last owners, it's not that impressive.
Okay, so there we go. We've got the scoop there from Veronica this morning. When we come back, I want to talk about Sydney's rental crisis. It is deepening. We'll talk about that next.
Let's fuel your passion for property together. Join us, along with our industry experts, to help inspire and inform your next real estate decision.
All right, well, let's bring it on back home there into Melbourne. Interstate buyers are having a bit of a look at the moment in these areas, Yarraville, Seddon, Footscray and others. What is the attraction factor at the moment for those suburbs?
It's definitely, if I have to sum it up in one word, it's a better value compared to other interstate purchase. So you got investors from Adelaide, Sydney in particular that are definitely back to the market here in Melbourne. They feel that the growth here is definitely better. So while we're not seeing that increase straight away, but you've got the Footscray Hospital getting built, which is going to mean that anywhere in Footscray is going to, all those apartments or buildings that are getting built because of the Footscray Hospital, they're definitely on the pickup.
Ready to take your real estate knowledge to the next level? So are we.
It is a Real Estate Wednesday. Veronica Morgan is with us and talking all things property. Want to talk to you this morning, Veronica, about the rents in Sydney particularly, which are delaying home ownership. Sydney's rental crisis has never been worse. You know, one of the problems with this, and I was saying this to you off air, you've got people in Sydney trying desperately to save for their deposit. In some cases, unfortunately, they're only sort of one job loss away from being completely homeless, which is a crazy scenario. You could never have sort of forecast that, 10, 15 years ago.
Oh, Sydney, I think, is well regarded as, world-class city now. And in terms of property prices, we're right up there. And in fact, Sydney is priced, into property prices in terms of buying into the market, it really has decoupled from the rest of the country. And so, and one of the reasons that it is so strong and will probably continue to be so strong is because now you've got lots of people here that have equity in properties here. And once you're in the market, you're able to continue to trade in that market and upgrade in that market and so on. It's getting in, as you say, that's the big challenge. And yes, rents have been steadily rising, although the rate of growth of Sydney rents has been declining rapidly since over the last 12 months. It seems to have plateaued now. The CoreLogic data on rental price growth is somewhat sitting around for Sydney as a whole, is sitting around about 2% currently. So that's not huge anymore, but it's still an increase, right? And interestingly enough, too, if you break it down, Domain put out a report for the quarter that breaks it down into areas, across different areas, there's different performance and different behaviour. So, but yes, the situation for tenants is really tough in Sydney. Interestingly enough, in different pockets, I was talking to someone the other day who's got real estate offices out in Blacktown, and they were saying that, well, they're back to incentivising tenants to take on a lease. So whereas, say, in the eastern suburbs, we can definitely see that there's multiple applications in my property management business at Preferential. We're seeing multiple applications on the first open house. Sydney is not one homogenous market. There are many, many, many sub-markets within it.
As far as the shared houses are concerned, when it comes to roommates, flatmates, etc., how much of that are you seeing translate with people buying properties in 2025, going in with a brother or sister, a mate, maybe even going in with a mum or a dad who might be single?
There is a bit more of that happening, absolutely, and particularly in Sydney. And, one of my other hats is Homebuyer Academy, where we teach first home buyers. We have the first home buyer course. And so we talk to a lot of first home buyers about what their tactics and strategies are for getting into the market. So there is a lot more. And I think it's well known that the Bank of Mum and Dad is now the 5th largest lender in this country. So you've got parents and grandparents helping their adult children get into the market, but you do have quite a lot more of this co-ownership that is going on as people do seek to find a way to leverage themselves into the Sydney property market. We do have a lot of students into our first home buyer course, not that many that are actually Sydney-siders, to be quite frank. We've got a lot of people that are there, say, in Melbourne. Melbourne is still difficult for first home buyers, but a lot easier than it is in Sydney. So I think there are a lot of challenges that Sydney-siders need to look elsewhere, and shared equity schemes, the government's, coming up with one of those. You've got the 5% deposit guarantee. There's lots of other ways that people are taking advantage of to get into the market. It is tough. There's no doubt about it.
All right, then, we'll leave it there. Veronica, you have yourself a fantastic Wednesday, and thanks again for coming on to the Real Estate Breakfast.
It's been fantastic to chat again, Craig. Thank you.
Each week, we bring you in-depth real estate discussions, including inspiring stories from homeowners, knowledgeable real estate professionals and economists. Whether you're a buyer, seller, or just a real estate enthusiast, we are your ultimate property podcast.
Got a friend who bought a property a couple of months ago after searching for almost a year. And like a lot of things, just when you think it's never going to happen for you, well, she found the one. Her personality changed to a calmer, more relaxed person that I always knew her to be.
Definitely all-consuming. I bought myself a few years ago, and in a couple of years running up to the final purchase, it became a little bit of an obsession, to be honest. We went to multiple different auctions and kept not being able to get the property we were looking at, and you kind of become obsessed with tracking all the auctions that are happening around you until we finally adjusted our budget, and actually were passed in on the auction for the house we currently live in, and they had to get into a trade war, the developer trying to sell it afterwards. So it was all very dramatic. But once you get to the other end of it, yeah, it's definitely a little bit of tranquil peace that you find, I think, in your new house.
We connect you to the best real estate information across Australia. The Real Estate Podcast.